Welcome to today's explainer. If you were watching the KSPI today, you know it was an absolute roller coaster. It was this brutal tug of war between creeping macroeconomic dread and just massive institutional AI accumulation. I mean, we literally saw the index plummet in the morning, only to violently repire by the afternoon. So let's actually decode this extreme intraday volatility, because this wasn't just some random market noise. No, this was a fundamental, real-time repricing driven by a massive collision of breaking international data. Here's your final scorecard for July 27th. The KOSPI somehow defied gravity, rallying nearly a full percent to close at 6,755. And the crazy part? It did this despite a really weak Korean won and a sudden collapse in crude oil prices. But to really understand that afternoon rally, we've got to talk about the morning panic first. It all started overnight in the US. Tech giants like Alphabet and Intel signaled that their AI infrastructure spending, their CapEx, is severely outpacing the cash they actually generate. The market instantly panicked, wondering if these titans could actually afford to keep buying memory chips at this relentless pace. And then, bam, the second blow landed. China's top memory chip maker, CXMT, hit the Shanghai exchange. The stock went absolutely ballistic, surging nearly 500% at the open and hitting a staggering 680 trillion won market cap. So why does that matter to us? Well, CXMT's massive IPO windfall goes directly toward expanding their factory capacity for commodity DRAM by 2027. Investors didn't even wait around. They immediately priced in a massive global supply glut, which directly threatens the future selling price of memory chips. Anticipating this brutal pricing pressure, foreign capital just aggressively dumped Samsung Electronics and SK Hynix right at the open. Because Samsung relies a bit more heavily on those basic commodity chips than SK Hynix, their earnings were seen as highly vulnerable. We're talking nearly 2 trillion won in foreign sell orders ripping through these two titans, dragging the whole KOSPI down with them. And adding fuel to the fire, Middle East tensions had already spiked oil prices above $100 earlier in the week. This lifted inflation fears, driving up the Korean 10-year yield. And, as a strict mathematical rule, higher bond yields absolutely crushed the present value of growth stocks. It was basically a perfect storm of macro and micro selling pressure. But then, almost out of nowhere, the script completely flipped. The afternoon pivot was explosive. And it was driven entirely by massive news out of San Francisco. A staggering $950 billion in confirmed AI cooperation was announced between Korean and American tech giants. First off, Samsung Electronics locked in a $200 billion memory and advanced foundry collaboration with Broadcom over 5 years. This effectively secures their crucial 2-nanometer AI chip production. And, hey, not to be outdone, SK Group secured an astonishing $500 billion AI infrastructure and long-term supply pact with Nvidia. Here is the absolute crucial takeaway from all this. The market suddenly realized that China's future supply threat means literally nothing to these locked-in custom AI contracts. High-bandwidth memory, the specialized chips AI actually needs, is an entirely different ballgame from legacy commodity chips. Recognizing this massive disconnect, both institutional and retail capital aggressively bought the dip. They treated the morning panic as a pure structural discount. Individual investors alone scooped up nearly 2 trillion won in KOSPI stocks, overwhelmingly targeting Samsung and SK Hynix. Adding to this overwhelming tech strength, Naver made a pretty massive move of their own. They announced a 1.48 trillion won directed share issuance, which is essentially creating and selling new shares directly to a single VIP buyer. And that buyer? Nvidia. This brilliantly illustrates exactly how the market values strategic alignment right now. Because normally, creating new shares dilutes the stock's value. But institutions completely ignored the math. Instead, they priced in the immense value of Nvidia becoming a direct stakeholder in Naver's AI business. As a result, Naver closed up over 8%. Now, as the tech sector was surging on these massive contracts, the global macro backdrop simultaneously shifted in Korea's favor. Weakened geopolitical de-escalation collapsed crude oil by over 6% in a single session. This plummeting oil instantly lowered import costs and inflation expectations. And in turn, that pulled down the Korean 10-year government bond yield, which dramatically eased corporate discount rates. This made those exact tech stocks the market was busy buying look even more attractive. However, the market is usually a zero-sum game, right?
So this exact macro shift completely destroyed the relative economic advantage of the domestic renewable energy sector.
Think about it for a second. Without sky-high fossil fuel prices driving up the costs of traditional energy, the foundational cost advantage of alternative sources like hydrogen and solar just vanishes almost overnight. The economic urgency to transition simply disappears from near-term pricing. And this triggered a truly violent sector rotation out of energy transition stocks. I mean, heavyweights utterly collapsed today. SK Hynix plummeted over 29%, Doosan Fuel Cell dropped nearly 30%, and HD Hyundai Energy Solutions lost almost 18%. So when you're looking at the final chart for the day, you really have to remember what happened under the surface. Unprecedented AI contracts absolutely saved the broader KOSP index, but this rapidly shifting energy landscape and the ensuing sell-off put a hard ceiling on today's advance. The KOSPI certainly survived today's tug-of-war, but it leaves us with a pretty massive question moving forward. As AI infrastructure demands consume more and more capital, will tech continue to cannibalize the green energy transition, or can both of these sectors somehow find a way to surge together? Think about that as you watch the markets tomorrow. If you want to catch these vital Asian market breakdowns before the New York bell rings, make sure to subscribe. See you next time.